Similarly, now I am hearing from the deal makers when it comes to the financing for new data centers, which has just been running at an incredible pace, that things are slowing a bit.
I'm not hearing that.
All right. Well, I said this yesterday. I'm not that the data centers being built is slowing or everything going in them, but I'm talking things that are out a while. But yes, that, things are getting a little softer. But that is not at all showing up in the comments from Alphabet,
right,
from Amazon, or even from Microsoft, where I know there's been a lot of concern.
Microsoft's the one, because
I think they're going to hold the line at 80 billion, but not more.
I think they're switching to OpenAI. Okay, here's my theory, and so far okayed by the powers that be. There is a shift from hyperscaler to others who need the latest and greatest.
What does that mean?
And by the way, Grace Blackwell is sold out, which is the current chip. Sold out.
Yep.
Next one, we're going to have Vera Rubin, from a great one from Philadelphia,
Yep.
one of the two people that's come out since Ben Franklin.
Yep.
And I will tell you that if you're a robot maker, you need all the ones that you can possibly get. Self-drive, you need all these. These are not hyperscalers. And the movement, sovereign countries, if you can move away from hyperscalers, and CoreWeave is a huge buyer.
Yeah,
I think what you find is the people who have felt that NVIDIA is people felt that NVIDIA was a easy short.
Yeah,
maybe not so easy.
All right, we'll talk more about this. You just heard the opening bell. Take a look at the real-time exchange. No surprise there, given where futures were, but as our viewers well know, that can change, and rather dramatically sometimes, with something as simple as a social media post from the president. Here at the big board.
True.
Breaking Ground, that's a nonprofit providing affordable housing in New York. Now, over at the NASDAQ, an IPO today, Rwanyun Idai, that's a Chinese education software provider.
Why are we allowing that?
Is that the last company we're going to see come public from China?
Do you think President Trump would just
You've
say,
been talking about this for years. Apparently, you haven't stemmed the flow of Chinese IPOs, Jim, despite your efforts.
My kids don't listen to me. No, but I'm saying that isn't it somewhat anomalous that there's a Chinese IPO today when we have an embargo on China?
Yes, it is somewhat interesting to note.
Interesting, that's good. I was going to say specious, but I like interesting.
I always go with interesting.
I go with ill-advised.
It doesn't make anybody feel bad.
No one's really complaining.
It's my favorite go whenever I'm talking. That's interesting.
How about suboptimal? That was another one I picked up.
Well, you're much more pointed in your commentary. I like to keep things very anodyne.
We just act as though a Chinese. No, I mean, I would expect someone in the government to say, "What the heck is that? Didn't we embargo them? Let's put a tariff on that."
We didn't put an embargo on their ability to sell shares into what is still the greatest capital market in the world.
Right. How about an embargo on Joe Tsai?
Now, that said, the bond market also is the greatest in the world, and there still is a question as to whether there's going to be a risk premium on riskless assets.
Wow.
And I think we saw that yesterday and the day prior in terms of the movement in the 10-year Treasury. You can see the yield is coming down ever so slightly, but we are higher than you might have anticipated, given everything we've seen, aren't we, Jim?
Yes, we are, given the fact that we should be in a hot seat state, which is, we're saying we were on a recession territory, ground, so whatever you want to say, until the tweet. Is that not insane? That a tweet came out and we went from being recession.
Now, we should have paid, and there were some who paid close attention to the post from the president around 9:30 something.
9:37, watching the show,
where he said,
where we were saying that maybe we should sell, and he came in through with an alternative narrative.
He kind of said, I
kind of went with that immediately as president.
And DJT, prior to that, he'd said, "Be cool."
Right, be cool was interesting.
So if you'd listened to him, he gave you the signals.
I see you, Hotsius, and I raise you, Trump.
He did. He gave you the signals to say bye.
The guy gave you the best call I've seen in my career, and yet there are people who are critical of that. Come on. He got the NASDAQ to have the greatest single day ever, and he let you in. How many strategies?
We don't need to look at DJT.
Kind of
We're talking here about the broader market. I was talking about how it was signed.
Have I seen that
it
kind
was
of power?
signed DJT in the post, but there you can see what's happening this morning.
But
yes,
amazing.
that move up yesterday was just, it was so interesting to be here, Jim, and here you could sort of sense the energy before we knew. Scott Wapner and I were sitting up there, and you were like, what's happening? What's going on? And
I know. There was a buzz.
There
was a
pulse.
Like,
wait a second.
Amazing.
And then, of course, we all read it.
It was like a paddles cure moment.
Trying to determine exactly what was exempt, what wasn't. and
Right.
and
But we have to acknowledge that it was one of the greatest rallies in history.
It was.
I should have said that right up front.
It was.
And you were allowed in it. You got the call.
all right, back to data centers, if I might, because
No, we're
it is
not
not
done this.
unimportant. We're not done on
We're
what?
not done it because
Do you
Jassy.
think anybody else got the? Do you think anybody else got the call?
Not my thing. You got the call. That's what matters. The people who watch us got the call. Now we need individual stocks to get the call.
We do.
Like Nvidia met with the president, but no call.
Yeah.
I'm just saying that shouldn't you, like the
What was
president, say, "Listen, it's
Nvidia
time
was
to
up-
buy microchip"?
No, but Nvidia was up 18% yesterday. Tesla was up 22%
David,
yesterday.
people were short.
They were
so
short
much.
so much.
I mean, I was talking to someone the other night, and the guy says, "You know what? I'm shorting everything you talk about." I said, "What? Like my wife's party on Friday? You're shorting the party?" I mean, like, come on.
It's gonna be a great
Everything
party.
you talk
Can't
about,
wait.
I'm shorting. That's what the guy said. Everything. I mean, I was talking about the Phillies.
All right, let's get
Short
back
the
to this
Phillies.
conversation we were having about. By the way, the conversation we used to love. I miss those days, don't you? Where we
They're
just
back.
talk endlessly about
They're
NVIDIA
back.
and AI and the need for obviously more and more data centers and everything that goes in them and how quickly things will move forward on AI and the need for power and that being the gating issue. Don't we all look back so fondly on those days? So let's revisit them. Andy Jassy was our guest on Squawk Box earlier, and this is what he had to say in terms of demand for AI and what goes on in data centers.
We have such high demand right now for AWS, and the AI growth is so significant that we don't see any attenuation in demand, and we're going to keep building.
And so it would be depending on what happens with the tariffs, there'd be no change to that view.
I don't see us attenuating or building data centers right now. We have very high demand.
I like the use of the word attenuating. So
Attenuated is business
spread
word.
it out.
Do you remember
Yeah.
that when AWS was selling, they were worried about attenuated commitment of their clients. Attenuated, I'm going to add that to along with ill-advised, along with
think you should.
suboptimal.
I think you should. I like the word. But what it means is, hey, we're going to build it. We're going to build it now. We're not stretching out deadlines.
Right.
We're going to work. And again, as we said, Alphabet's saying the same thing. And so, I don't know, Jim. Does that mean at some point we're going to get back to the AI trade, or is that kind of over and done
I think
with?
we're very, very much going to come back to
You
it
do?
because the video has not been included yet, and video is high and. It's high in NVIDIA, dude.
You know,
You need to train everything in video.
OpenAI's image generating app or bot or they added 100 million users at OpenAI. It's a private company.
And yet
Of course,
it's not
as our
even that
viewers
good.
know.
They rejected half the stuff I sent them.
It was
yesterday.
so expensive and it burned out so many chips so quickly. I think they want to stop it. I mean, what I understand is, 100 million users cost them 25 cents each image.
A quarter would be able to fix
Each
that.
image.
All the data center stocks are down. Okay, so David, I use ChatGPT, Grok, Claude, Gemini, and Perplexity. And Perplexity has leaped over Grok in terms of being able to do great things. But I tell Grok, listen, I want it in Jim Cramer mode, and they have been able to duplicate Cliff Mason, who's my nephew, my head writer, my only writer. So Grok is able to imitate you, but Perplexity is coming up with answers that are lightning speed. I mention all this because every one of these needs to spend more money with NVIDIA. Because, David, this is a winner-take-all, loser-take-none. We're not all going to just use every single one of these.
Well, that's a good question because, and you may say that's the case. Others disagree. In fact, I think Satya Nadella, and this is some time now in a podcast, said, no, given the scale of this, everybody's going to ultimately benefit and win. That there isn't going to be the winner-take-all.
Yeah, but I don't want one that doesn't update. We need, but if you get them.
And by the way, Jim, you keep talking about the consumer application, but really it's going to be the enterprise where the real money is conceivably made,
I
isn't
agree
it?
with that, but I'm testing these every single day, and right now Perplexity's got the edge on Grok, which had the edge on ChatGPT, which had the edge on Claude, which had the edge on
And
Gemini.
one will be moving ahead of the other in some way, another, but it's going to ultimately be all the
Google
different kinds
search.
of applications.
Like, I never sat here and said, David, have you tried Bing? Bing, like White Christmas?
I do remember Bing. It's been around for a while.
Yeah.
Remember Ask Jeeves? Remember that one?
Ask Jeeves was a forerunner. I used to
Loved
not Ask Jeeves. But I'm just saying that you go onto these. I mean, I'm no offense to Mark Zuckerberg because Meta AI was interesting, but that scrapes much more about pop culture.
Yep.
I learned that Eddie Vedder was in Pearl Jam.
Yep.
Got that.
There you go. Well done.
Right from Meta AI.
He's done some great covers lately, Eddie Vedder.
He's very strong.
Beautiful. Yes, a couple of beautiful songs. Yeah. All right, CarMax. I'm going to change it up now. Let's move on because this stock is down a lot. Net revenues were $6 billion. They were up 6.7%.
And they didn't do the number. They missed bad.
They did. They didn't have anything. Their commentary from their CEO is not necessarily negative at all.
Yeah,
He's
Bill's
sort of talking about
usually
robust
better than
EPS growth and unit sales increases and strong growth in total profit. Market doesn't like it at all.
No.
Don't look so sad about CarMax.
Is it price? I like Carvana. You know that.
I know you do.
Okay, so what was the one stock that hit an all-time high yesterday?
Wait, that's it. We're done with CarMax. We've moved on already.
It made me think of another discounter.
Okay,
it's
tell me.
It's the CarMax of apparel.
Which is?
TJX was the only one that hit a high yesterday.
Interesting.
What does that say to you?
It says that people expect that they're going to be looking for bargains because they're going to be paying a consumption tax.
Now, that gentleman we had earlier was saying that there's no inflation. That's good.
Because
he
tariff
lives
is
in a
paid by the countries.
I live in the world which says like 2 oranges for $6. I mean, like, you out of your mind? But I will say this. TJX is going to be the beneficiary of all the department stores that were over-ordered in order to have enough merchandise. So they have to offload it to TJX, and that's what that says. All right? I worked hard on that yesterday.
I love it.
Thank you.
You're welcome.
Yeah,
well
good.
done.
All right.
Well done.
Do you know when I got to Goldman, I wore a button down, and they told me to go home?
Yes, you've told that story before.
We've
been together a long time. I've heard a lot of your stories.
Well, the only reason I mention is Goldman's about to report, okay? And David, Goldman is at the fulcrum of everything. It's down 20 today. It was up big yesterday. It sells at 11 times earnings. And what I'm getting at is that maybe at 11 times earnings, if they miss the number, it doesn't go down that much.
Isn't that a moment that investors would be looking for?
Yes.
If you get an earnings miss and the stock doesn't go down,
and that's
then
why
maybe
I mentioned
that's a
Goldman,
sign.
That should be the most volatile one.
Yeah.
Let's say, okay,
we're going to start hearing from the banks. Now, listen, an expectation that we're going to see the IPO window open again, which it almost appeared to be unlikely. M&A, here it is. Early to mid-April, nothing to speak of. Very difficult to negotiate a deal given at least a price. It's very hard to in this kind of an environment. Yeah. I'm sure dialogue continues, but it doesn't mean that it ends with any sort of a deal. Unless you're the same company, 2 companies in the same business doing an all-stock deal where your ratios can be negotiated. It's just hard to imagine you're going to see a great deal of M&A, Jim, but they do a lot of trading at Goldman Sachs.
But what's interesting is everything you said is so true. So maybe they do, instead of doing 12, maybe they do 11, and the stock doesn't get hit.
Right.
Because it's selling at 9 times next year's earnings. So this is what I'm talking about right now. At this moment, people are recalibrating, and maybe they say, you know what, I knew Goldman was going to be bad. It was bad. Okay, next.
Right.
A total reset of our entire S&P.
And that could be an important moment.
And that's what we have to look for.
All right. We are also always looking to Capitol Hill. I want to get to Emily Wilkins.
You're really good, man.
I am?
Yeah, you're good. You're just good to work with, partner.
Isn't that nice? I mean, later on he'll hate me again, but
no,
right now he
I
loves
love
me.
you right now because your mom's sweet as hell to me.
Yeah.
I miss my mom, but
All right.
I
got to get to Emily Wilkins.
Sorry, I was out of line.
I got to get to Emily Wilkins on Capitol Hill. Emily, take it away. I know you have some breaking news for us.
Yes, so we have Speaker Mike Johnson came out this morning and said that he believes that he has the votes to move forward on Trump's major agenda. That includes, of course, that $5 trillion package of tax cuts. Now, other members who I've spoken to this morning, it doesn't seem like necessarily a sure thing, but it seems like they have gotten momentum and made progress since last night. Remember, the main concern here for a lot of Republicans in the House is that what the Senate passed is ultimately going to add trillions of dollars to the deficit. And you saw Senate Majority Leader come out with Speaker Johnson this morning and say, the Senate is committed to the House is cutting $1.5 trillion. We're going to get there, trying to give members some confidence that they will ultimately reconcile the 2 instructions between the House and the Senate to come up with that one big, beautiful bill, as Trump has described it many times. We expect to vote on this coming up in the next hour, and we're going to see if they actually have the votes to move this to the next step. Guys?
Yeah, Emily, I wonder to any extent at all whether the potential revenue, the external revenue service that is going to be collecting these tariffs, at least 10% across the board, and the potential revenue from that, do you think it's going to figure in ultimately to the conversations around what tax cuts will be extended and what new tax cuts may be implemented?
It's a very interesting question. I mean, will it factor into the conversation? Yes, absolutely. This is something that lawmakers are going to point to. They're going to point to the cuts that DOGE has come up with. They're going to basically be pointing to anything they can to try to alleviate some of the concerns of members who see us adding trillions of dollars to the debt. The fact, though, is that there is an official scoring that happens on all of these bills, and that number really can carry the day sometimes. And so at this point, there is a potential that we are going to see trillions of dollars added to the deficit because we want to increase basically a $5 trillion tax cut and at the same point only cut about $1.5 trillion in federal spending.
Okay. Emily, thank you. I know you'll keep us up on what continues to evolve there in terms of that bill. Of course, that's, Jim, where we're going to be turning next.
Trillions.
Oftentimes in terms of what actions Congress takes to get a bill together,
right,
in terms of extending the
that
2017 tax cuts and
it's
then
like
potentially adding some new
game,
ones.
Congress.
Yeah.
Yeah, they're still still play a role in the government.
I guess.
They do. You just saw her. She talked about it.
It's true. It's true. Member to Congress.
Yeah, it's good.
Some couple of other things to get to for me this morning. Some concern about like things such as movies in China, for example.
Yeah, no,
right?
that was a statement and a half. Right? Give us that one.
You can. I think the conversations I've had this morning indicate you can sort of ignore that to a large extent.
Just showerheads versus movies. Is that what we?
There may be a slowdown in the Chinese economy that shows itself in terms of people perhaps not going as much to restaurants or even to the movies or to theme parks, for example. Obviously, Shanghai Disney comes to mind. But from what I'm hearing, when it comes to the movies themselves, the domestic industry in China has grown enormously over the last number of years.
Oh, good.
And that has really, the U.S. box office there is down something like 85% from its high.
Right.
And you only get 25 cents on every dollar of revenue. So those who are looking to that somehow as being an important component of overall earnings for the likes of Walt Disney or Warner Brothers Discovery and what it might mean, I think you can dismiss that. Now, other questions, of course, for these kinds of companies are what's going to happen to the advertising market. If companies start to pull back a bit, what does it mean for consumer and consumer products even? Obviously, Disney has significant sales of consumer products. Warner Brothers Discovery, not as much, but I think it's about $1 billion or so. Yeah. But right now, everything I'm hearing is that they're not seeing a pullback. Even in the U.S., not seeing a pullback.
Having worked for an evening newspaper, having worked in radio, what I know happens is during a recession, then it does become a winner-take-all. The advertisers pick 2 or 3 that are still going to do well, and they funnel all their ads to it. So you would do well with Meta, you do well with Amazon Web Services, which of course is attenuated, and you would do well with Alphabet. Those are the 3 winners, and everyone else is a loser. That's how it is. Now, once again, having been in this business, I know, but you see, the people who are in the business aren't going to tell the media what the story is.
I know.
But I saw and was eviscerated because of this, so I'm willing to say it. It's like GOP-1s. I was a business person before I got involved.
What is the point, though, that you're making?
The point is that the linear loses. They just go right to TikTok.
Oh, yeah.
They're going to plow it.
Yeah.
It's like Yum, which knew to go to TikTok instead of TV.
I understand there may be a glut of inventory to a certain extent on digital overall. Now,
but
of course,
TikTok
the streaming
is the way you
services
reach
now,
people.
remember, so many of the streaming services now are ad-supported, so you've got an entire new area there.
Well, now
not
streams,
new, but
you add
more.
the streams together, and guess what you get? The bundle.
Get the bundle.
But
Get
no,
the
David,
bundle. By the way,
it's
just to point out,
TikTok, and TikTok. That's how you reach people. It's the #1 form of advertising. That's why it's talked about all the time.
well, that's why the likes of AppLovin, for example, is one of the companies that wanted to actually buy TikTok because they think they can monetize far better, given their technology and their expertise, than
They're
can
not that
TikTok.
good, but they do have a great audit committee run by Craig Billings from Wynn, who's really a serious guy. Those who are short that stock, another invitation to their funeral.
Yeah.
But I do think that people have to understand that it's when you speak with big companies, consumer companies, all they say is, listen, we're shifting everything to TikTok.
Yep.
And I say, well, how is that possible? How about linear TV? And they say, is that because you still work for linear TV? And I plead guilty.
Hey, we got the showerhead. We got the
Do you have that?
gold mine people. We've got
the showerhead is the president. Look, so President Trump is talking about showerheads. President Xi's talking about movies.
And we've got
These
it
are
for
two
them.
really, these guys really get right
Joe
to
Lee.
the heart of the matter.
We've got great advertisers. We love all of them.
It's a shower head?
Hey, let's talk about the bond market, shall we? We didn't really come up that much today, other than, of course, you don't want to mess with the bond market. I think we all learned that. Let's give you a quick bond report this morning. Yields are down, but they are across the board down here. You can see we're now 4.3 on the 10-year. Don't forget, though, we were briefly below 4% only, really, a handful of days ago.
I know.
Before that,
That was was it Chicken Little, or were we really
somewhat
worried?
unexpected run up in yields, and obviously because prices were down and there were a lot of potential sellers there. We'll keep a close eye on it. We're coming right back.
Resort.
Just put all of it in perspective. That's just 3 trading days and a little more now. You can see the likes of Tesla yesterday. Week to date is up 8%. Obviously, that includes yesterday's 22% jump. Extraordinary. As Jim said, of course, so many who were short the stock and immediately
it was a lab short.
running to cover. Up next, we got Stop Trading with Jim.
happen.
All right, glad we have a little time in stock trading to talk about Apple, the stock of which, of course, was up over 15% yesterday. Last I heard, they still make most of their iPhones in China.
They do, and some sent to Vietnam, but there are people in the White House who think that's just transshipment. Put some screws in from China, and then, boom. So you have the regular part and then the screws, Vietnam. David, there's trying to make a discussion right now about exemption and Apple. It would be devastating to the Chinese if they gave Apple a year-long extension to be able to move away, because then Apple wouldn't be hurt, and Apple would know it'd have to leave. And at that point, it would get to 2,000
Can Apple
engineers.
really leave? I mean,
There's
what I
2,000
hear is
engineers who are crucial to the Apple, to Apple development and making.
and the Chinese, I heard, don't want to
And
let
not-
them
they're
leave.
not allowed to
And then the specialized tooling as well.
Right.
It's not that easy.
No, but I'm saying that if you gave them a glide path to get out, the Chinese would lose 2 million workers. It's about how many it would be. Apple would not be hurt. Apple would become prominent.
See, so as part of it, you may want to give Apple an exemption.
That's what
puts even more pressure on the Chinese. Is your point.
Exactly right. Let's say you gave them a glide path where it would be 10%, then 20, then 30, then 40. They take 2 years. They said they're going to spend $500 billion in the United States. So you should be. They should be able. The president's touting it.
I know,
so
but-
that should be the course of
They're
action.
never moving iPhone production here.
No, but if you want to hit China, have them move it. See
All
what
right,
happens.
real quick. Anything on Mad tonight? Anything at all? You got
I think
anything?
that- yes, I have Key. Why do I have Key? It's a huge bank, but it's about America. Just like Cintas. These are, if you think that China, and we're never going to get away from foreign trade, you have to start buying heartland banks and heartland companies. Like Cintas, which I love.
Thank you,
And then,
Mr.
of course, United Health, which is going to go to 750 because they got.
There you go.
They got to say so. David, this was great today, and we accomplished a lot.
I'm not feeling as good about it as you are. I think we could
No?
have done better. Yeah. Tomorrow we'll do better.
Praise yourself hard.
All right. Meanwhile, I got another 2 hours with you, so I can just kind of keep trying to improve here. We're staying on top of course, the sell-off. We're down 2.5% on the S&P. You can see that. And by the way, tomorrow we are going to have BlackRock CEO Larry Fink joining us. Very much looking forward to that interview. We'll be right back.
now.
Good Thursday morning. Welcome to Squawk on the Street. I'm Sarah Eisen with David Faber and Mike Santoli. We are live, as always, from Post 9 of the New York Stock Exchange. Carl's on assignment. Stocks are under pressure again after that epic rally we saw yesterday where the Nasdaq closed up 12%, best day since 2008. We are giving some of it back today, down 2.86%, which would normally be a pretty steep sell-off, but given the magnitude of the moves we're used to these days, 4 or 5% in the major averages, it looks tame. Dow's only down 957 points. Usually that would be a big red flag and a big sort of indicator of weakness. The only group that's higher right now in the market is consumer staples. It's up about 0.5%. Everybody else is lower. Energy's at the bottom of the pack again, down 5%. Take a look at treasuries. They've been the eye of the storm lately. That sell-off in treasuries certainly got the White House's attention. We are seeing it back off a little bit. 4.3 though, that's elevated from where we were below 4% earlier this week. 30-year yield watched carefully. We'll get another bond auction. Yesterday's 10-year was very successful. Let's see what the 30-year yields today.
All right, we are 30 minutes into the trading session. Here are some big movers we're watching, starting with the big jump in European markets, rising sharply after President Trump temporarily reversed course on tariffs, at least most of them. Banking, tech, and industrial stocks notching the biggest gains. Obviously, that follows the huge gains in the U.S. yesterday. We continue to monitor the bond market, as Sarah said. The iShares National Muni Bond ETF moving higher following a dramatic drop earlier this week. So, again, recovery in all areas of the bond market from the brink. And take a look at the weakest S&P sectors so far today. They are energy, tech, and consumer discretionary. Among the biggest laggards in early trading, of course, they were the leaders, at least consumer discretionary and tech were coming off the lows. Staples, the only sector higher so far today.
We continue to monitor the fallout from President Trump's reversal and his pause of tariffs on dozens of countries, except, of course, China. Eamon Javers joins us from the White House. He has some of the latest news for us. Eamon.
Hey there, David. As the dust settles here after the president's reversal on tariffs yesterday, the focus here is now on what comes next. White House trade advisor Peter Navarro told me that the administration is going to come up with a schedule for negotiations, given that they just can't physically conduct 75 simultaneous trade negotiations with the countries that are interested in that, which leaves the big open question of what's going to happen with China, where President Trump is increasing tariffs. National Economic Council Chair Kevin Hassett on CNBC this morning predicted there will be negotiations.
It's an absolute extreme disruption for the Chinese economy right now that's come because of repeated terrible behavior on their part, including aiding and abetting the fentanyl trade. And so I think China's going to have to figure something out, and my guess is it's going to involve reaching out to us and setting up talks.
But Chinese embassy spokesman Lu Pengyu striking a defiant tone in a statement today, saying if the U.S. wants to talk, our doors remain open, but dialogue must be conducted on the basis of mutual respect and equality. If the U.S. is bent on waging a trade war, China will fight to the end. And guys, if we're tracking which factions have the upper hand here at the White House now, I'm told that there were only 3 people in the Oval Office yesterday making the decision to reverse course. They were Commerce Secretary Howard Lutnick, Treasury Secretary Scott Bessent, Trade Advisor Peter Navarro, a staunch advocate of tariffs, I'm told, was not there. One other thing I'm told, guys, this morning is that there's going to be a series of meetings here at the White House throughout the morning as they work on how to tier these negotiations, which countries go first, which come in the second tier, which come in the third tier, et cetera. All that being worked out behind the scenes right now, guys. Back over to you.
Yeah, it's a lot, obviously, to tackle in 90 days. Eamon, do we have any sense? And I know the president made some comments, I believe. Correct me if I'm wrong, about potential exemptions in certain industries or for certain companies, even when it applies to China, for example, and whether Apple might get an exemption as it did last time.
We don't know, is the bottom line. I mean, the president has throughout this been both saying that he doesn't want any exemptions, but also, saying he's willing to negotiate. So I think, companies would be well advised to be here on campus lobbying this administration, because clearly there's a huge moving target right now, and all of them can have their opportunity to weigh in. I think companies that are seen as having done the right thing and trying to get with the program here might have a friendly ear, but we just don't know for now.
Okay, Eamon, thank you very much. Eamon Javers, S&P down 2.6%. Did get some economic data today to talk about, because on a normal day, I think the market would be celebrating what we got out of inflation numbers, which is key right now, and even jobless claims. You put them together and it paints the picture of a very solid economy. Now, it's also somewhat stale because it comes before the tariffs are in place. But the good news is it shows that we have, first of all, moderate job losses, 223,000 initial jobless claims last week. That's not a high number. And moderating inflation, which is good because maybe we can absorb the tariffs better, given we're getting these kind of inflation numbers. They were a surprise across the board, and I'll just run through some of the highlights here. We got the core CPI, which excludes food and energy. Fed watches carefully. On the month, rising only 0.1%. Definitely less than expected. The expectation was 0.3 and a step down. Overall, consumer prices were actually negative. They fell 0.1% on the month. The estimate was up 0.1. So where are we? We know the Fed wants to target 2%. Overall, we're at 2.4%. So we're getting there. It's better. Now, part of it was a big drop in energy prices and gas prices. You've probably felt that at the pump. Airline fares saw a big decline on the month. That's good news for travelers because we've been paying high airfare taxes, airfare fees. And then, I think apparel was kind of high. Food at home was a little bit high on the upside. I mean, this should be peak egg prices, which surged 60%. Transportation costs also came down, so that was a part of it. But if you add it all up, it's just further indication, I would say, with the jobs report last month, that our economy is solid. And without some of these tariffs coming into play, I mean, we'd be talking about a more Goldilocks story today, which is tamer inflation, better growth prospects, and not having all these recession
We'd
forecasts.
probably be talking about the Fed having room to cut in May.
Right.
Without a doubt, if you didn't have the tariffs,
It's priced now for June.
You're kind of now on the glide path you would have seen. It is definitely a good picture of the starting point for the economy and maybe what we have to work with. So I think the market's still struggling with, exactly how much pressure is going to be put on that economy in terms of this the tariff pressure, and then is any damage done in terms of the market and the administration sort of set up to test one another for at least another few months.
Well, today it's kind of a slowdown trade. Consumer staples and utilities are higher. The cyclicals are under pressure. If your head is spinning about tariffs after yesterday, so we got the big relief on the pause, the 90-day pause on all the countries, but we still have a lot of tariffs coming. So I made a nice little explainer about all the tariffs that are still in place that this economy is going to have to deal with. We have 125% tariff on Chinese goods. We have 10% universal tariffs on all countries, right? Just not the higher ones. We have 25% tariffs on non-USMCA goods from Mexico and China, and some estimates are that could be around half of the goods from China and from Canada and Mexico. We also have 25% tariffs on goods imported from any country that buys Venezuelan oil, which we don't know full impact of that.
And auto-related,
we have
right?
25% tariffs on autos and then auto parts set to kick in May. We have 25% tariffs on aluminum and steel. So that's everything that's been announced. And then what's also been teased is more tariffs on copper potentially and on pharmaceuticals and other industries. So if you add it all up, and every economist has a different number for this, we're looking for that effective tariff rate of where we are versus where we could have been and versus where we were. I took Pantheon's macros, but again, it's not a precise kind of number, but what they say is we're going to be at 14% effective tariff rates without China. And then factoring in China, they go to 17% because they assume a lot of the imports that we get from China are going to be rerouted to other countries and other economies.
Oh, you have to assume that direct imports from China go way down, if not go,
almost to zero.
And it's kind of why the market is, I think, implicitly where the market is right now, it's assuming that that's not, an indefinite state of affairs.
So there's the 17% today with everything today where they think the effective tariff rate is. And it could have been worse because with the April 2nd plans,
we were going to go back up to above
20%.
Right?
Yeah, but you can see historically we're still very high.
What about 10-year. Sarah, has a risk premium been added in some way to what was considered a riskless asset, or does that say too much?
As of yesterday, that was the discussion.
Yeah, it sure was. But does it continue to be?
Like, it might be. The fact that the U.S. is capable of doing this sort of policy shock, I do wonder if it brings into question, the questions about brand USA, and does this tarnish the appeal of U.S. assets or the credibility of U.S. assets. Impossible to answer that. We have to just see that over time and what foreigners do, for instance, with their treasury holdings. And we'll watch these auctions, which, become interesting now, right, to see what demand looks like. I will say, there's been demand for bonds kind of throughout, even in the sell-off in the last few days. It was nothing extreme or panicky. I think Rick Santelli mentioned there were some liquidity things starting to show up, but there was no crisis. So we're not there yet. Clearly, the White House is paying attention to it, and the market likes to see the White House paying attention to it. And people are buying bonds today. So I think it's early to have that conversation, but it's out there now after we got this policy shock, I think.
Yeah, just the overall questions in terms of confidence and credibility. Let's get over to Steve Leisman. He's got some breaking news from the Fed. Steve.
Yeah, and also some good tag team stuff with what Sarah was just talking about. Schmidt saying that Kansas City Fed President Schmidt saying that in the conflict between growth and inflation, he intends to keep his eyes squarely focused on the outlook for inflation. He says he's hesitant to embrace the theory that tariffs are one-time price increases. This is the kind of tough talk we've heard from other Fed officials. He's concerned that a further jump in prices could push up inflation expectations. And once inflation is embedded, it becomes more difficult to contain. He's not willing to take any chances with the Fed's inflation-fighting credibility. So again, more tough words, very much echoing what Powell said on Friday. Lori Logan also chiming in. She does say the Fed is well positioned right now in terms of its current policy. So not expecting any big change here, but higher tariffs would boost unemployment and inflation, and the Fed should keep tariff-related price increases from becoming more persistent. In other words, it's the Fed's job here. On this issue of what changed yesterday, a reduction in downside risk, but it didn't go away by any stretch of the imagination. Take a look at some of the calls that we're monitoring here. Goldman did walk away from an odds-on bet about recession, but went down from 65 to 45. MetLife went from 75 to still above 50% at 60%. I emailed Bruce Kasman from JP Morgan. He's maintaining his recession risk, says risks have moderated. And Morgan Stanley says the pause lowers the immediate downside risk, but prolongs uncertainty. I don't know if the concern about this, and then real quickly, here's another look at what Sarah was talking about. I got a range of views out on the street. Oh, here's Citi saying pausing reciprocal tariffs excluding China does not essentially mean the U.S. economy has avoided a slowdown in growth. And here's the trajectory. We had a 3% tariff rate before. The Rose Garden tariffs raised it to 30%. And now, very much like Sarah was saying, I'm seeing the effective tariff rate, including China, 20 to 25. Wells Fargo's at 27. So the bottom line is, guys, we still have very high tariffs in the United States, and economists still need to forecast lower growth and higher inflation from both of them. Guys?
All right, Steve, thanks very much. Appreciate it. Equities just off session lows right now, giving back just about a portion of yesterday's gains. Our next guest says yesterday's big rally confirmed the Trump put is back. Tom Lee, Fundstrat Global Advisors co-founder, managing partner, and head of research, joins us here at Post 9. Tom, good to see you. We were in search of perhaps some kind of a floor level of a Trump put. Maybe we got there. I guess, first of all, let's go to what history says about these extreme type market conditions, right? We saw very, very rare levels of forced liquidation, washout conditions Friday, Monday, set the scene for the kind of forced buying, panic buying in a sense yesterday. But where does that leave us? Because a lot of those huge one-day rallies have happened in bear markets.
Yeah, I agree. I mean, investors, I think, were fearful we were being pushed into the abyss of a depression. And there's a lot of technical damage that isn't necessarily fixed by just having a one-day rally. So I think that investors are understandably cautious. But one thing that my friend Tom DeMark likes to call is washed out markets.
Yep.
And I think some things really got washed out, and that's what we're going to keep an eye on. I think it's actually kind of constructive. Like the Teslas and the Mag 7, they basically bottomed on Monday.
Yeah.
And so even though the markets were plumbing new lows into Wednesday, they were holding up, and they've made a big move. So I think there's an argument to me that high beta and the Mag 7 are what you want to watch. And I'm kind of in the camp that this is going to extend further, the rally.
So, I mean, you were bullish going into this whole thing, right?
Yes.
I think everybody did not expect it to be so severe. After yesterday, how much changes fundamentally around your bullishness? Because it's great that he paused on all the other countries, but as we mentioned, we are still going to have to face a lot of tariffs, and that could hurt growth.
Yeah, I think the upside case for stocks is impaired, right? Because the Fed has made clear during the midst of this that for the Fed put, it really isn't in play until they have a better idea of inflation. I mean, we just heard that again. So I think markets then have to depend on fundamentals and then a policy path from the White House that they can't necessarily depend on. So I think markets are going to put a bigger risk.
But can they depend on it? I mean, the White House did make it clear that they would be flexible if things really started to get shaky.
Yes, but at the end of the day, I think companies aren't going to get hit as hard as we initially thought. For instance, even looking at these revised tariff rates, to me, there's still the ceiling. So even if this is what's in place now for 90 days, I think there's a chance things could still improve from there. And of course, it could be better for U.S. companies, and there could be concessions made for U.S. businesses. So do I think stocks, do I think stocks are an easy road from here? No, I think it's going to be very challenging. But again, I think so many things got washed out. I think the Mag 7 especially, that's where you're going to find opportunity.
You do. All right, the Fed put may not be there, but what about the Trump put? Is it back?
It's in the bond market.
And can you rely on it?
Well, it's got a different variation, right? Because it is driven by instinct. So there's not a level that's going to make a difference, or how close to recession do we get? So
we don't have a handle on the reaction function, as we would say with the Fed. Yeah,
that's right. It's like it's a blunt instrument that we don't know where it strikes.
Right.
But at the end of the day, I know U.S. companies are going to be very innovative. I mean, for instance, if they have higher import costs, they're not just going to pay higher import costs. They're going to be very innovative on cutting costs, which just means AI spending should be a lot higher and automation spending. So, I mean, it's actually good for tech over the next 12 months.
We could see a reduction in employment, though, right?
Yeah. I'd say, that also, again, acts as a stabilizer, because to the extent that Main Street jobs get lost, I'm not sure then we can say that these policies are good for Main Street.
Yeah, I mean, and just in terms of, I agree that, at least on a tactical basis, the washout conditions were there. They piled up over the course of a few days. Mag 7 definitely led us lower. They were breaking well before the broad market was. It wasn't really about tariffs. That being said, the NASDAQ 100 went from like 27 times forward earnings to 23.5. That's a huge drop in a short period of time, but not necessarily to levels that have ever been kind of cheap or put the risk reward really in your favor. Where do you think that means? What do you think that means for forward returns?
Yeah, I mean, valuation's definitely an art, because, X Mag 7, the PE on 26 is, let's say 14.5, 15.5.
Sure.
It's somewhere in that range, which is not demanding.
No, it's not.
But the Mag 7, I think they're always going to earn a premium because they're not capital-intensive businesses. They essentially make money without incremental cost. I mean, I think they should.
CapEx is pretty high at some of them. I mean, as a result of the data center build-out.
That's true. Yes. There's a CapEx, but then there is what I'd call a higher expected realized return, because there's a network value to their CapEx, right? Because the bigger these data centers are, the harder it is for a new entrant to come. So it's the same reason like the tower industry ultimately gets pretty high multiples, even though that's capital intensive, because no one's going to build another tower now.
Cell phone tower, yeah.
I mean, you like Mag 7, but this is a more cautious Tom Lee than I've heard in a while on the overall market. You're usually very bullish.
Yeah, I mean, I'd say Tariff Liberation Day was a huge negative surprise for us. I mean, it was actually so absurd. It was hard to believe that this is what could be happening to our real economy. So I think that's still, still recovering from those ripple effects.
Don't you think the current level of China tariffs also fit into that category, though? The market is seeing them as maybe too absurd to last?
Yeah, I mean, 125% tariffs. I mean, they're bananas. I mean, it's pretty
It's an
hard to
embargo,
believe.
as Jim says, almost. It's not really even a tariff. It's just saying, all right, we're not going to do anything.
It's not sustainable, though?
I mean, if it's sustainable, I think you guys exactly said this right. There's going to be a whole new supply chain built, and even a lot of businesses built around subverting tariffs, you know?
Yeah, it's sort of a tax on global efficiency.
But if you've got to build a new supply chain, you're going to spend a lot of money to do it. You're going to cut back in other areas if you're a corporation, aren't you?
Yeah, and I think that's the reality. Like, when companies need to cut costs, it is going to be employment that's going to take a hit.
But retail, it's easy. I mean, retail, you just need like a sewing machine and some labor. I mean, it's not as capital intensive moving some of these factories.
We're going to have.
You don't need to go to ASML and get one of their rare.
Can't do it here.
Go to the garment center again, and people.
No, go to Vietnam, go to Bangladesh. They got relief.
Come on,
you know?
you and I took home ec. Come on. All right, Tom. Good to see you. Thanks a lot.
I love the Garment Center. As we head to break, here's our roadmap for the rest of the hour. Mag 7 under pressure this morning following yesterday's big rally. How to position in big tech from here?
Plus, leveraged ETFs are booming amid the tariff volatility. Who's buying and how they're playing it?
And Amazon CEO Andy Jassy laying out his AI investment plans. This in his annual shareholder letter. We're going to discuss that. We've got a big show ahead for you. Let's walk on the streets right now.
And make it count.
Well, technology overall, and certainly the Mag 7 names are under some pressure today. This after that incredible rally yesterday. The group's still in bear market territory. It is down more than 20% from the highs they were hit back in December. Joining us now at Post 9, Melius Group Head of Research, Ben Rice. It's good to have you here.
Hey, David.
I can only imagine what you're dealing with in terms of your clients, given just every day kind of being whipsawed. But let's start off with the AI trade, if we can, something we've talked to you a lot about. We've had Jassy on our air talking about no slowdown in demand, said we're not attenuating the data center. Alphabet coming out, reconfirming sort of CapEx. Even Microsoft. Are you a believer? Are those good signs? Did things get back to what we thought they were?
Well, there's good signs. Like, I liked what Jassy said today. Also attenuating. I love that word. But I don't think that they are slowing down at Amazon. I don't think they're slowing down at Google. That's good. Microsoft's a little more debatable.
Yes.
They're kind of. They are a little attenuating a little bit, maybe, potentially.
That's what we all kind of hear, at least.
But
Yes.
it does seem like it's going to OpenAI and others. Oracle's picking up a lot of the slack. You see, what David, there's a chance server prices really soar here, and storage and gear. So actually, the big clouds actually might be cheaper. So you might want to bring some workloads into the big clouds, because on-prem gear could soar in price, and then they have a relative price advantage. So if I'm running a big cloud, I don't know if I slow down right now, because you could actually take more workloads.
So you think you're going to take more stuff
Yep.
off of on-premise, where a company
Yeah.
is saying, all right, we got to move more stuff to the cloud because it's just going to be cheaper.
It's going to be cheaper. And heck, I mean, if you're a big bank here in New York City, you have no idea what's going on. So it's like, why not leverage the cloud? Maybe it's cheaper. Maybe they can scale up and down, and you focus on something else, because it's so uncertain right now. Why pay 20% more for gear on-prem?
Right. I mean, some things, like banks, some things they want to keep on-prem, I would assume.
Yeah, of course.
Yeah.
But it was an example. But the price shock that we're seeing, we're seeing HP Enterprise and some of their competitors raise prices on servers. A 20% shock is a big number.
Is that the expectation? I mean, obviously,
That's
a
what
lot
we're
of
seeing in
servers
our
come from
checks.
a lot of places around the world, all with 10% now. I don't know
Yeah.
how many are made in China.
Quite a few.
Quite a few.
And everything goes through there. It's really hard to determine what's going to happen to the price of this on-prem gear.
Well, I mean, you can't 125%. I don't know what you do. What you're going to do?
Well, that brings us to Apple, one of my longtime favorite names. I know it's getting crushed. I hope Tim and Donald are talking, and maybe Tim's got to invest a little bit more here to get an exemption, because this is just too much. I think that also you got to remember with Apple, they employ millions of people
Yeah,
in
Jim
China.
and I were talking about it earlier.
So, there is a lot of uncertainty out there. I'm wishing the best for Apple. I have a hunch Tim's on it, in a good way. And I think the cloud guys are going to keep going. But the on-prem stuff, you got to watch. There was a rush to buy in the first quarter. There could be a big slowdown in 2Q, 3Q because everybody's stocked up. So the clouds may be the best game in town. And the Mag 7, hopefully keeps spending.
So not peak capex, you don't think? We're not at peak capex?
For some people, but I think if you're in the cloud, you got a once-in-a-lifetime opportunity
Investment.
here. So you gotta be careful. If you're going to slow down, you may regret it in 3 weeks.
And then on Apple and some of the others you cover, I mean, supply chain is in focus with all the tariffs, and that's a pressure point. But what about demand? I mean, especially for a company like Apple and some of these others that rely on China, does this change that entire equation as well?
Yeah, we cut numbers on Monday. It was a little bit like put your finger in the air and try to figure it out. But China is going to go down. It's just a question of how much. It's already been hurting there. The nationalism and some of the concerns got to hit earnings for an Apple. You hope that slows. You hope that peters out at some point. But
you're talking about the domestic sale.
The domestic
in China
sales.
of iPhones,
18-19% of sales.
Yep.
18-19% of sales are in China. That's got to go down hundreds of basis points from where we were thinking. So we cut that. That is something we got to watch. But like I was saying before, the big thing that's going on right now is you saw PC sales better than expected in the first quarter. That's not real. Trust me, I'm looking at PCs every day. I mean, the AI PC is a bust. So that was
Why? There was so much hope for it.
Well, that's
Dell, HP,
you got
they were
me
so
on
excited.
for an hour here.
Yeah.
We're going to talk about that. But people are buying in the first quarter in semis, in hardware, and then we got to see how that goes in the second quarter and third quarter. And, it's a concern. That's why we cut numbers proactively, because at the very least, we know that's going to happen. Then we got to see what happens with Apple. But look, cooler heads.
If Apple doesn't get that exemption, what do they do?
Well, they're going to have to move here eventually, and
Move here?
move production.
You make an
more.
iPhone here, it's going to cost.
Hey, look, there's talk they were putting stuff on 747s.
Oh, they were. There's
Yeah.
no doubt they were
Yeah.
doing that. Right. They're trying to get 2 quarters of inventory over here if they could.
They
is
are.
what
They're
my
going to move
understanding.
more stuff to friendly countries. and they're going to be more flexible. But they are the number one China focused supply chain, and it's a big part of sales too, and they're going to have to move it over gradually. But I'm holding out hope. I think, Tim can up that 500 bill number, and he could work with, TSMC. He could, I know Jensen's trying to do more here. So let's see what happens.
Important story. We'll be following it with your help as well, Ben. Thank you.
Hey, thanks for having me on, guys. Sure. Good luck to you.
And to you. As we head to break, check out Tesla. 3 Wall Street firms cutting their price targets for the stock today. UBS goes to 190, Goldman to 260, and Mizuho to 375. So still all over the map. The stock's under pressure after yesterday's 22% rally of Tesla. It's down 6% right now. We'll be right back.
Welcome back to Squawk on the Street. I'm Silvana Hanau with your CNBC News update. Talks between the U.S. and Ukraine over a minerals deal are set to begin on Friday in Washington. That's according to Kyiv's deputy prime minister. She added that any potential deal would not clash with obligations tied to aid from the European Union or International Monetary Fund. President Trump is pushing for the deal as a way for the U.S. to recover billions of dollars spent on military aid to Ukraine for its war against Russia. The death toll from the roof collapse at a nightclub in the Dominican Republic has risen once again. Officials say 218 people are now confirmed dead in the tragedy, and they added crews are now transitioning from a search and rescue phase to a recovery operation. And Prada struck a deal to buy its smaller rival Versace from Capri Holdings today. The move brings together two of the most iconic names in Italian fashion. The deal has a value of around $1.4 billion. That is a big discount from the roughly $2.1 billion Capri paid for Versace in 2018. Mike, I'll send it back to you.
All right, Savannah, thank you. Well, another volatile week of trading in Bitcoin. It is back above $80,000 following yesterday's rally. That's after touching its lowest level of the year. Over the weekend, you see it around 81,000, just under 81,005. It did dip below 75,000 at the lows. The cryptocurrency now down more than 20% since President Trump took office following that post-election rally. Bitcoin-related stocks like Strategy, Block, and Robinhood all under pressure as well today, giving back some of yesterday's gains. Block, the biggest year-to-date laggard in that group, down 35% so far in 2025.
Though Bitcoin has outperformed on the month. I mean, it's only down 1% month to date. What's the S&P down 5%?
Yeah.
Month to date, NASDAQ.
But it's farther below its high. And I would argue the more notable thing is how much Bitcoin's underperformed gold, if they serve a similar purpose this year.
True. But outperform the dollar and outperform stocks is just interesting.
Yep.
All right, still to come. Traders are jumping into riskier ETFs amid this tariff volatility. We've got some new numbers for you. As the market volatility continues today, down almost 4% on the S&P, almost 3% now on the Dow. Only consumer staples are higher in the S&P, and tech is at the bottom of the list again, with Nvidia, Apple, Microsoft, Broadcom, Amazon, and Tesla all weighing on the NASDAQ. We're back in 3. Welcome back to Squawk on the Street. President Trump's tariff pause and a strong 10-year Treasury auction helping calm the bond markets a bit. Yields are lower this morning. We also got softer CPI. The 30-year coming off its biggest three-day yield increase since the COVID-19 pandemic. The 10-year yield coming off its biggest three-day gain since the summer of 2022. Let's dive into the macroeconomic outlook and the risk of recession at this point. Diane Swank, KPMG chief economist, joins us now. Huge sigh of relief yesterday, Diane, when the president paused with the high tariffs, the high reciprocal tariffs all around the world. But we do have some tariffs still coming into place. And we have a very favorable backdrop, as we learned from inflation and jobs. So what's your outlook now?
Well, actually, the tariffs that are in place as of today are higher than we thought they would be, announced on April 2nd. And that is because of the move up in tariffs on China in particular. That those stay in place, over 100% tariffs on China, along with the 10% across the board, except for Mexico and Canada, which have their own tariffs they're dealing with. Altogether, that puts the effective tariff rate at a record high, about 30% right now. That is something we've not seen. 1899 was the previous record, slightly below that. And I think that's very important to remember. And I think that's part of what financial markets are starting to sort of digest, is that the pause is not an end to the trade wars. And in fact, we are now at a higher rate than we were just a few days ago.
I know a lot of people calculate that differently, the effective tariff rate. I pointed to Pantheon's model, which was at 17%, because they assume that 90% of the imports from China will be rerouted or just simply go away because those tariffs are just so onerous. So they were looking at a lower rate.
Well, the one thing the administration did attempt to do was try to stop some of the movement through what we call connector countries as well, with another executive order